Good evening, everybody. Johnny Seville here from Acorn Wealth. This is Executive Summary, and we have a great little summary for you tonight. Well, probably not little. It's going to be a little lengthier than normal because the action-packed market is providing so many opportunities that we're going to break down quite a few different possible longs, as well as a plethora of great shorting opportunities we found in the scan tonight. Okay, so let's have a look at the S&P 500 first and foremost. Now, if we look at, just going to expand that. Take some of these moving averages off. Right now, we are essentially in oscillation mode. So we'll just remove some of these lines. In fact, we'll just delete it all. What we can see is we are in a head and shoulders pattern that we talked about last week. We came right up into that right shoulder. We peaked and then broken down perfectly. So as we said, we expected the market to close last week around that 2100 to 2110 level. We felt that the S&P would be held there by the plunge protection team. Go back to last week's summary on Monday, Tuesday, you'll see us talking about that. That's exactly where it went to. So is this market chaotic? Sure. Unpredictable? I don't think so. Market held there and then just perfectly rolled over, down to the right side. Now, open range was printed yesterday with a high of 2105 and a low of 2087. We haven't broken that yet because we closed within that at 2093 today, but certainly the pattern suggests that we are going to be going lower. As you can see, the 9-day moving average not helping at all, so it confirms the nature of oscillating patterns. So the head and shoulders is likely to be the one in charge. Now that means at least a drop down to this 2080 level, and a head and shoulders then, unless it's a complex head and shoulders, should break. A complex head and shoulders would mean another bounce off this support and rally up to this 2120 area and then break. But so far we only had one kind of weakly formed left shoulder, so I would expect that right shoulder there. The other potential is that we have began a downward channel. If that's the case, we would we look at that potential. So we know the gradient at the top, so that would be the gradient to the bottom, but still that means lower levels yet as we come down and test support somewhere around 2050 if that just drops through. But either way, as you can see, we looks like we have a mainstream of bearish activity. But we want to have a look at both sides of the market. So firstly, let's have a look at a possible long setup on AVP, Avon, I guess it is, Avon Products. The stock's had a tremendous decline over the last little while. If you have a look at the long-term chart, it's just continually decline. It's generally struggled with its 20-day moving average in small bounces, as you can see throughout here. But when it's broken the 20, it's at least gone for a small run before generally running into the 50-day moving average. So that's the big kind of threat to that. We'll have a look at the Twigs money flow. So you'll see here we had a big spike up in the Twigs money flow. So the problem is going to be the 50 as I see it. But if it breaks, we could get a nice little pop because it's a very volatile stock and the money flow is kind of in its favor. So there is buying from the inside and institutional buying. So I'd be looking at a very speculative play, so like a possible entry around 583 on the pullback to the average, with a stop loss around 562. So we've got about 20 cents of risk, and on the upside I'd be looking for a target of 647. So we've got about 20 cents of risk for 60 cents of reward, or just a little bit more than that. So that's from a risk reward standpoint still valid, but I still have my trepidation about the moving average. We've also got EBIX, and EBIX was actually one we were looking at as a short that actually broke down and has reversed on that short current. So the money flow also has moved positively, and from this perspective, this could be a possible long from around 31.30. Pull back again to the moving average with a stop criteria around 30.71, so about 60 cents of risk there in terms of the difference to those criterias, with a potential target of 33.93. So again, about about 70 cents of risk or so for a $2.60 reward. So there's a good risk-reward ratio of almost 4 to 1 there. Okay. Now, on the short setups, there's quite a few that I'm looking at. Now, we just hosted our very special, the big one, educational event. So any of you guys and girls in there, this is kind of a little bit separate to what we talked about tonight, but similar types of things we're looking for. GWRE was one we did mention tonight as a possibility. We've got, on the longer time frame, a downward channel that's we've broken up from. And we're just starting to curl over, as you can see in the short term, appear to be in a descending triangle. So you can just see we're plodding along around this 58 level, and you've got that overhead resistance coming down. So descending triangle, which is a bearish formation. The price to earnings ratio, and this is 194, so quite peaky. 6% short float. And it reports earnings on September 1st. So we'd want to see a breakdown here as well below the moving average. So I'd be looking at a $57.18 type of entry criteria with a target around $50.18. So looking at about $7 on the downside, and if that were to occur, I'd be considering a stop criteria around $59.46. So about $2.30 of risk for about $7 of reward. So again, we've got that nice 3 to 1 type of risk-reward ratio. CSC is next. Similarly, has a high P/E ratio. This one astronomically high, 1302. Is the P/E ratio. Also has big insider selling, 6% short float, and reports earnings warning on August 11th after market. On this one, we can see that there's a potential longer-term head and shoulders pattern with an ascending neckline, a little bit of a weak structure to the right shoulder, so not perfect, and again, a bit of weakness here in the fact that we have a downward pointing channel. So I generally am really cautious about downward channels because they are typically bullish formations, but within a potentially overall bearish pattern. As well, there's these very weak bottoms here, which have been tested many times. So if we see a breach of this support at 64, and then a strong break of that downward trend, that could be the ticket. Again, still concerned about that a bit, but I'd be looking at an entry criteria around 63.29 with a stop criteria around 66. So that gives about $2.70 of risk, and then a drop to 56.73. So we're looking at about $6 on the downside. So could be quite interesting. Could be better as an options play. Away. This one has actually earnings today. So if we actually take, you can see that longer term, we have a consolidation triangle, sideways consolidation. We have downward money flow, and then if we take those away, you'll see that we've actually got a head and shoulders here based on these lows and then that neckline. So where would you expect this to go next? You'd expect this to go up as a head and shoulders to around $30.45, right? Around where I'm pointing with the mouse. Well, that is where it went because they actually reported aftermarket today with their earnings when aftermarket was trading up around $30.44. So it's going to gap up into that area, and that could be a nice little shorting opportunity from $30.40 to $30.60 down to say $25.93, which is where that extension of the head and shoulders would be. And I'd look at a stop loss at $31.70. Price to earnings ratio here of 406.86 estimated, and 6% short float. So again, another tech stock that or internet-based stock that could be susceptible to weakness. Second last here on the list, VMware. Just came across this tonight. Now, the one thing that is a bit against the trend of the types of things I look for is that it is it's got that strong money flow. So this could have a potential of stopping out, but we've seen what's happening with tech stocks with the Apples and the IBMs. We've seen a lot of tech fall apart, and so this one could be at a reversal point. Now, the Twigs money flow is the main problem I see with this. We've got a triple top on the resistance as well. So I'd want to play it with a very kind of tight stop. So I'd be looking at an entry around $90.70 to say 92 is the range. It's got an 11% short float, and I'd be wanting to put a stop criteria just above that area. So looking at around 93 or so. So looking at $3 on a $92 stock, or even higher, we're looking about 1 to 3% stop loss. To the downside, though, if this breaks, I'd just be lowering that stop loss above where it's moving below the moving averages, and but as a target somewhere even around 81 would be the first stopping point I'd look for, but could drop even lower. It's got a P/E ratio of 44, and this is kind of in an area that is struggling. And if you have a look at how far it's come from, up from $20, if the likes of Apple and so forth are really taking a hit, then we could only think that possibly things like VMware creating software solutions for it maybe next. So that's one I like, and also got some insider selling there. And last is Gap. GAP, Gap stores, or excuse me, it's not Gap, it's GPS. Gap stores. This one's got, again, 11% short float. Price to earnings ratio a little lower on this one, 12.3. We've already got Men's Warehouse rocking and rolling, but this is one that also came across my radar. And Gap stores, you can see, just broke basically, I think it was the 3... let's have a look. 3 years, was it 3 years? Yeah, 3-year low of these prices here around 36. It just broke down, and you can see that the next place in sight is down towards $30. So Gap looking for around $35.16, basically where it is now, down to $30.16. So a $5 potential drop I'm looking for down to that area. And I'd look at a stop loss at $36.66. So about $1.50 on the upside of risk for a $5 return. Again, we're getting that nice 3-to-1 risk-reward ratio. So there's a couple of longs and a couple of short setups that we're considering for tomorrow's trading, and certainly hope it helps. Now, if you did miss our big event tonight, it was epic. We went through the top stocks we're looking to trade over the next few months, how we found them, the types of options we're looking for to trade on them, and shared the key list we're operating from, which won't be shared in these executive summaries. It's a one-time course with ongoing education that results from it, and simply go to acornwealthcorp.com/big1 to enroll. acornwealthcorp.com/big1. It's about a 2-hour course from tonight, again with ongoing classes to educate the ins and outs of how we found it all. So if you missed it tonight, grab the recording while it's still current, and we look forward to seeing you all in the next executive summary. Take care and good night.